office, right? So there you go. I was doing a quick workout between the lab and this, our Unplugged with Marquet and Bill that we do every single Tuesday. We appreciate you guys coming in and spending time with us. Let me throw a disclaimer up here so that you guys are all completely clear and aware of why we are here. I am here as a teacher, an educator, and a coach. Neither one of us is here to provide you with any kind of investment advice. That's not what we're here to do. We're here just to teach you. Neither one of us are broker-dealers or investment advisors. We will mention that we consider certain securities or positions to be good candidates for the types of strategies we're discussing or illustrating, but just because we consider a security or position appropriate to the discussion or for illustration purposes does not mean that we're telling you to trade that strategy or that security. Keep in mind that we're not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual, even if we used your name in the course of the workshop. Also understand that any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that is suitable for any specific person or purpose. Keep in mind that all trading involves a risk of loss, and that will always be the situation regardless of whether we're discussing strategies that are intended to limit risk. Also, BetterTrades personnel are not subject to trading restrictions. I and others at BetterTrades could have a position in a security or initiate a position in a security at any time. I just had a call from Ireland. How about that? How many of you guys get calls from Ireland? Anyone? No? Okay. I pushed the wrong button there. I'm still there. Yes. Pamela, I'm here. Good. Okay. So yeah, somebody had asked if you're supposed to be impressed that I got a call from Ireland. I don't know if you should be impressed or not, frankly. Let me make one thing perfectly clear. I am definitely not here to impress you. What was it that I sent something out on Facebook the other day? I think I sent it as a text to Marquet, and it said, "Not everybody likes me. But then again, not everybody matters." So probably didn't. Yeah, I won the Irish sweepstakes, right? or when I was in law enforcement, we used to work a lot of the cases where you were the long lost relative of a African prince or something. So there you go. Okay, very good. Thank you, Stephanie. I appreciate that. Aloha, Gina. How are you doing? I appreciate you joining us, especially at the insanely early hour that it is out there. What is it? Like, what, 9, 8, 7 in the morning there? Something like that? Judith says, I love that one. Not everyone matters. Yeah, exactly. Jose says, I talk to my family in Spain every day. Awesome. 6 a.m. in Hawaii right now. Oh, wow. Okay. That's great. So I got you guys laughing already this morning, right, with my not everybody likes me, but not everybody matters. So, you know, it's kind of funny. That is one of the things that you're just going to have to deal with if you become financially successful, right? If you become successful in any venture, you're going to have to deal with people not liking you. It's just one of the facts of life. Deal with it, accept it, and like I said, while not everybody likes me, not everybody matters, so I really don't care. So there you go. All right, let's talk about the market, shall we? Let's see here. Let me get some of your questions. You guys asking a lot of questions. All right, love it. Yes, sir, Lawson. Education comedy class hour has begun. Patty wants to let you know. Well, yeah, Pamela, that's fine. I can let you know. I talked to Marquet a little bit ago, and she's been, as you guys know, Marquet has been on vacation. You guys might know that. And they stayed over last night in Tampa and are flying home right now as we speak. Could try to text her, but she's probably at about 30,000 feet. She did say to let you guys know to say hi. Now, for those of you that are wanting to spend some time learning from Marquet, unfortunately, she won't be able to join us in this class. She will, however, be joining us live and in person in Miami, and that's why I put this post up here. I don't know if you guys saw this or not when you went into the BetterTrades My Account page, right, the one where you have to go to get into this class. One of the banners that we've got up there is this banner that tells you that you, Bill, and Marquez in Miami, right, April 25th and 26th. Get to that event, guys. It's going to be an awesome opportunity. One of the things that you might have noticed if you did click on it is that we are going to be getting together and doing a special presentation at this event. You don't want to miss it. Sign up now before I run the price up. Right now it's a $99 attendance, and quite frankly, we've basically been giving away information for free at these $99 events. Certainly won't take much for me to decide to run the price up on those. Put it in another name, right? Call it something different, teach some new stuff, and charge more for it. Drea, where have you been? Drea says you guys never do East Coast, D.C., Maryland, Virginia, North Carolina. Marty, my understanding is that she will be at Trader Talk tonight unless something goes on, right? Did anybody in here ever travel? Anyone? No one? No one travels? Okay. For those of you who do travel, those of you road warriors, right? Yeah, if you're a road warrior, you know that sometimes you don't get to decide when you get to your destination. So assuming that everything works out all right, flight-wise and whatnot, and they hit all their connections, she should be. Okay, Judith says, I am a road warrior. Whew! I hear you, right? It's crazy. So, Drea, the reason that I asked, you said, right, we don't do East Coast. Right now, today, as we speak, Rob Roy is teaching live in Baltimore, which last I checked is in Maryland, which last I checked is one of the states. Oh, you met Marquez and I. You would like us to go to, well, hang on a minute. Let me just give you a date here. How many of you guys would like to see Marquez and I come out to the East Coast, the other coast, right? Because Miami apparently is not East Coast enough. I crack myself up. It's on the East Coast. I have a map, all right? I checked. It is. It's over there. Or the Midwest. All right, so here you go. You ready? May 9th and 10th, we have an event scheduled in Philly. If you would like, I can see if we can get out there and two of us do that. Sally wants me to go to Maine in July, right? Okay, but you got to bring lobster. How about we talk about the market? How's that sound? You guys want to do something like that? Yeah, I'm with you, Dean. We had an interesting discussion about what's been going on in the markets here this morning in the morning lab, and we traded some stuff. We've been looking at some things, but I ended the session in lab this morning talking about what we're seeing in the market. And one of the things we want to do is to take a look longer term to let us know kind of what's going on, where things might be going. And what you guys tell me, right? I mean, it's one thing if I give you all the answers or if Marquez gives you all the answers. What is it that you guys are seeing in the market here? What's going on in the market? Looking at this picture right here, daily chart of the S&P going back to 2011, really going back to 2010. What are you seeing? What is significant in what you're seeing in the markets here? You're not seeing it? Okay. How about now? And now you see it, don't you? Jose says possibly inside a wedge pattern. Okay, Scott, how are you, sir? Scott says lower highs. Thank you. John says lower highs. Lucas says no new highs. Trish says, market's not making a higher high. Brenda says sideways. So you can probably make the argument that things are going sideways. I think this is what a lot of people are looking at, Brenda, right here. If you're to grab this and just kind of take a look and see what we're seeing, it looks like we're seeing a series right there of lower highs, and not only lower highs, but what else has been happening kind of in the big picture here? Linda, very good. Linda, good to see you. Yeah, lows. Debbie says that Marquet might like the way that the W is forming on this. So bigger picture, right? We actually have two W's, right? There was one right here. There's one right here. But if you take both of them together, what do you have? Possible that you've got a lower right-hand, bigger picture double bottom here near an area of potential support. And so this could be potentially bullish for the market. For it to be potentially bullish for the market, guys, we have to take out these previous highs. And the market has really just kind of been in this malaise, if you will, which is not unusual in an election year, that we see markets that are going effectively sideways to slightly down ahead of an election. But if you look at this, you can kind of see what the pattern is. You can kind of see how things have been going, a series of lower highs. We have to take out this previous high, and today we've got a pretty good jump on that. We're starting to move higher and starting to break a little bit higher. We'll see if, in fact, we can break above the previous highs. If we can't, then obviously things become much more bearish looking in this market. So always good to have kind of the big picture view of what's going on in the market. We've had a couple of double bottom patterns down here. That 1800 level is an area that seems to be able to attract some buyers. We'll see if that can hold if we do sell off down there again. But we've just sort of been drifting lower here, right? And the 200 moving average kind of trending down. Yeah, it is. One of the things that you might notice here, what's the 200 and the 50 getting ready to do here, guys? Yeah, they may be getting ready to cross to the upside. The cross to the downside is called a death cross. That was this right here. When the 50 moving average crosses down through the 200 in the market, they call that a death cross, right? It doesn't even sound good. What is this cross over here called, though, if we get it? Anybody know what that's called? Very good. Sally. Sally says a, no, Mike. You're killing me. This is called a potential golden cross, right? And that golden cross is the 50 moving up through the 200. Interestingly, if you look at the four major indices using, those of you that have e-signal, if you use the template, I believe I downloaded this one in there for you guys, right there, called the Four Horsemen. You guys have heard of the Four Horsemen of the Apocalypse? Okay, this signal that we got, the Four Horsemen, occurred when we had all of the indices, the NASDAQ, the S&P, the Dow, and the Russell, all had the 50 moving average cross down through the 200 moving average. That is called the Four Horsemen, and basically all it is you've got the death cross on all four major indices. We did get some nice selling pressure off of that, right? And so for several weeks we got some selling, but you bring it current now, and what you see is that all of the indices are prepared to cross back up, and that the Dow has already done so. I mean, you look at the S&P, we're right there. The Russell, maybe not quite as much. The Dow definitely has crossed, and the NASDAQ is moving in that direction. The S&P is right there. So are we bullish or are we bearish? Looking at the S&P here, are we bullish or are we bearish? Longer term, are we more bullish or are we more bearish? Okay, I've got a couple votes for bullish, and then there's a couple votes for bearish. Then there's another bullish. There's a I don't know-ish. I like that, Sally. Bullish longer term based on the moving averages, Scott says. Neutral. So Jose says it depends on what it does from here with respect to the previous highs. Very much does. Guys, longer term, you know, what are we looking at? We're looking at a bullish rally, right? We've had a bullish rally that has gone on, in this case, for years, right? And we've got potentially some bearish indications here. We've got lower highs and lower lows, incidentally. We've traded back above the 200 moving average, have not yet been able to take out those highs. Here's what's a little concerning. Now, this may look familiar to some of you it may not. If you traded 2007, 2008 during the bear market, you saw something similar to this. Broke below the 200 moving average a couple times, even managed to rally above it, but could not put in a higher high. Does everybody see here how we broke down, could not put in a higher high? Every time we would rally, we'd put in a high, but it was a lower high, and then we failed to break out and hold those highs. Does everybody see that? Okay, and during that time, we actually had the death cross right here. And that led to this retracement, beautiful retracement to the 200, and then again another new lower high right at the 200, and that was it. That was at that point, Katie barred the door, because this is what ended up happening. This was the sell-off in 2008. So I'm watching what's going on currently with much interest, because we seem to be trading on both sides of the 200 moving average, more to the downside than to the upside, an inability to put in higher highs, and the fact that the market seems to be essentially breaking down a little bit to lower lows and lower highs does not put us in a really, well, not in a position to make a really strong long-term bullish argument for the market. Jose is correct, though. If we can clear the previous highs and start taking out some of these previous highs, that changes everything. Then this pattern becomes nothing more than a bull flag in a secular bull market, and we could rally hard off of this and move much higher. Who was it that brought it up? Jose, another Jose says, bullish long-term, mid-term drifting. It's where we're drifting that's the concern, right? Trish says, sideways depending on earnings. You know, we've had two quarters of earnings contraction, correct? Everybody know that? So Debbie was one, I think, who brought it up, that Marquet really likes it when we see a market that puts in a right side lower double bottom, which you kind of have that a little more complex, right? Because there's double bottom and then a double bottom. But those right side lower double bottoms, those of you that have Marquet's DVDs, that is a more powerful pattern. That is the more powerful pattern of the two. So for now, what we've got is a market that in the very short term, when we drill down into this, has retraced nicely to the 20 moving average, rallied off of that level, and has given us a nice bounce here today off of that 20 moving average. And Drea brought up the point, says, yeah, Demetrius, there is that. Demetrius says the president pretty much twisted Janet Yellen's arm yesterday not to raise rates this year. And, you know, I mean, each one of these sell-offs was brought about to a degree. The catalyst for it was the raising of interest rates, right? And so clearly the Democratic Party, who is interested in taking the White House, is not interested in having a bad economy as a headwind to do that. They're the incumbent party. I don't know how much sway he has over Janet Yellen, but I would imagine that the discussion did come up. Right? All right, let's see. Close to the high at 2130. So, yeah, we've got to take out the high at 2130. So we've got a nice bounce here, and I was looking in the comments here. Andrea brought up a point, said, how do you know that it's a reversal and not just a retracement? Right? And Andrea was talking specifically, I think, Andrea, I can't find your comment. It was a good one. Good question about how do you know it's a reversal versus a retracement, right? Because if you come over here, you don't know, right? You don't know. You don't. So how do you know? How could you know? All right, Darla says, failed to put in a new high. Okay. Probably, Brenda. It looks like it may be. Market bounced at 20. I saw the Bollinger Band bottom, and it completely reversed. How do you know when it's a bounce or a retracement? It happens so fast. Got in the downside, and I keep messing up. Okay, you're in there. You're swinging at the ball. That's okay. So here, at this point, and I love this about the eSignal platform, that's so easy to move back and forth and retest things and try things out. Was there a legitimate entry at this point right here, because we had broken through the lows of the day and we had broken through yesterday's close? Can you use that as a bearish entry? Absolutely. Absolutely. Got no problem with that. Right? None at all. The only issue that I would have with that is this right here. That breakdown was so close to the 20 moving average, which, let me just ask you, had the 20 moving average acted as an area of support recently, like 3 days ago? Johnny, how you doing? I haven't seen you in a while. Where you been? You've been hiding from me, haven't you? Good to have you back in class. So what kept me out of loading up on put options this morning, Drea, was that we were so close to an area that had acted as an area of support in the past. Starting out with the daily chart first, saw the support, we started to break down, went right to the 20 moving average. Right? Got it. Okay. On the intraday chart, this happened right at the 20 moving average. Now, we don't have an entry there. There's not a bullish entry there yet, is there? I mean, I guess you could make the argument that you could try, but just because we're bouncing there, not quite yet, and it won't happen until we trade above that candlestick body right there, right? So you can make the argument that wick might have got you in. I don't have a problem with that. Not an issue. What about here? Would this candlestick get you in? Did this candlestick start trading above all of this other activity? Yes. No question, right? All right. How'd it work out? It was beautiful, right? I mean, you had this nice big old rally and a little bit of a sideways moving into a Bollinger Band pinch for the middle of the day. Very, very normal behavior, okay? Got in downside of tweezer top at 955 because we're below the 10. Okay, so up here, 955, right here. Okay, so let's talk about that. Was this right here a good potential bearish entry because we were below the 10? Correct, David. That's how we've got it set up. You can make the argument that this is a good entry. You got a tweezer top. The 10 moving average, which was right here, is probably right in here. All right, great. We're going to get in there. But how far are we expecting that to move? Right, Dre? I mean, if you look at this, were you thinking that the market would go to here, or possibly to here, or that it might break down and go all the way down to here? What was the plan? Right? And then look at the plan and look at the probabilities. How far is this market probably going to move? What happened 2 days ago? Okay, Dre says, I thought it moved to the 200. Okay, so what kept it from moving to the 200 2 days ago? Because 2 days ago, you even had a more bearish looking pattern. And we couldn't get what kept us from getting to the 200? The 20. So let's look at it from a probability basis. This morning, when the market is trading lower, it's below the 10, you get a nice tweezer top, and you go, I'm going to buy some put options, and it's probably going to bounce right here. So I'm going to buy some put options right here, and it's probably going to bounce, and then I end up getting stopped out if I'm quick down here. Why would I say that? Because it's happened before. Right there. It did it 2 days ago. Guys, remember, when you get into a trade like this, if you're buying put options on the S&P, you are buying put options on a bullish market. Okay? Overall, big picture, we may be trending sideways, but for the last 2 months, what direction have we been going? I'll take a drink of water while you all think about it. Notice the yellow line. It's been going up, bullish. The market has been bullish. That is momentum. Dre, I want you to write something down, something that I taught to the class in San Francisco, something that Marquet and I stressed at the class in Tampa, and something that we will most certainly be covering in Miami. And it's this: the single most powerful force in the entire universe of trading and investing is momentum. You're fighting momentum. There's nothing bearish about this chart this morning. Right? There's nothing bearish here. This is a bullish momentum market, and we're bouncing from the 20 moving average. So that tells me that buyers are likely to come in at the 20 moving average, and if we look at the intraday chart, that is exactly what happened. Now, there are people who are going to say, yeah, but Bill, that rally in the market was sparked because the Russians and the Saudis said they were going to freeze oil production. Gotcha. That rumor was around 2 weeks ago. Guys, markets move because of traders. They don't move because of news. They move because of traders. Traders trade off of technicals. Technicals are a self-fulfilling prophecy. We get down to the 20 moving average or near there, and actually we didn't even get down to the 20 moving average. This rally right here happened to the nickel at an area where, well, we did get down to the 20. It happened to the nickel on the 20 moving average, and we opened right at an area of support that I identified in lab this morning. So you got to look at these charts and go, okay, of the two, I mean, guys, just do nothing but this. You look at a market or a stock, and you see a market or a stock that is doing this, draw a line on it, right? Draw a line. We're going on here, and we're going to here, and we're above the moving averages. We seem to be going up for 3 to 5 days, down for 1 to 3, up for 3 to 5, down for 1 to 3, up for 1 to yeah, well, that looks like a bullish trend to me. And then when you are tempted to buy put options on a bullish stock or a bullish market, you will be dissuaded from it. You will dissuade yourself from it. Does that make sense? Philip, how are you? How do you define momentum? I have a definition that says momentum is motion and a time that may be required to reverse it. Okay. So, Philip, that sounds like an engineer's definition, and I love that because it brings up some important points. So momentum is, by your definition, motion and the time required to reverse it. Okay, so let's go there. Let's say that you live on a cul-de-sac. You have a driveway that faces your neighbor's driveway. Both of them are very steep. Your kid goes outside, rolls your bowling ball down your driveway. The bowling ball picks up speed. It has momentum. Goes across the street, hits your neighbor's driveway, and begins to go partway up your neighbor's driveway before all of that momentum bleeds out, and then it finally begins to reverse direction. Does that make sense? Okay. Which just goes to my argument, ladies and gentlemen, that a reversal is a process, not an event. It takes time. It takes time for something to reverse direction. This market is not reversing direction yet. It may, but it's not likely to happen in a single event. It's a process. It takes time. And this morning, Brian brought up the point that right now, it looks like we may be in the process of creating a potential reversal pattern called a head and shoulders pattern. They take time, right? But I'm not going to trade the S&P bearish until the S&P is bearish. Same goes for Apple, right? Oh, but Bill, it's below the 200 moving average. It's a process. The stock is not going down right now. It's going up. It's been going up for a month and a half. That's momentum. That bowling ball is picking up speed on the driveway. You stand in front of it, it's going to break your toes or your shin. So don't force the trade. If you don't like the fact that Apple is sitting under the 200 moving average, don't trade it. But you don't buy put options on it while it's got bullish momentum. Amazon. Beautiful breakout today. We're already in call options in the lab in our paper trading account. Beautiful breakout, bullish momentum. What direction has the stock been going? It's been going bullish. Now, not as strong as some other stocks, which gives me reason to actually keep this one on my list, because if the market becomes super bullish here, this is one stock that I can jump into, hasn't moved as much and is likely to be dragged up with the market. Look at Facebook. Oh my God, this is awesome. Why is this awesome? UVXY, what is that? Okay, let me depart Facebook for a moment here. I don't even know what this is. What is it? Your spreads aren't bad. Looks like they have weekly. Oh, it's an ETF. Volatility. Okay. So this would be a play on the VIX. Gotcha. Okay, volatility dropping. so you could actually play the balls if you wanted to. We've got some kind of cool things we do in the lab on the VIX from time to time. VIX is going down, so the UVXY would be the ETF that tracks it. You know what I'm going to do here? I'm going to add that, Ron, to my ETF list. Look, I've got an entire list of ETFs here. All right, so I now have added that to my list. Back to Facebook for just a moment before I lose my train of thought, because sometimes I'm like that. What is so awesome about Facebook? Love that. Patty says, so my stock market education is a process, not an event. Yes, we've got to reverse momentum. What is this line marking? You know what? This was a line from an entry that we triggered at a live event. We can just get rid of it there. Jose, get rid of the stop on it. All right, what's awesome about Facebook today, guys? Bouncing at the 50 moving average. Thank you very much. Awesome. Love it. You want to know what else is awesome about it? We got in it on the bounce off the 50. Okay? Now this was the first 5 candlestick, second 5-minute candlestick, came down. So I want you guys to think of this. If you were trading, the stock comes down, hits the 50 moving average again, then bounces, goes up for a large body candlestick, and then the next candlestick is bearish. What would you be thinking here? What is the potential pattern right here that would tell you, hey, Facebook may be a good place for me to buy call options? Now remember, this morning, this was here. It was here, right? It wasn't all the way up where it is now. It's all way down here. A potential rising 3, exactly. Okay, so a potential rising 3 pattern. And there it is. There's the completion to it. Boeing did it too. Yeah, I know. Boeing had an awesome setup this morning as well. You think maybe we got into that one? All right, so now Facebook's going into a nice tight Bollinger Band squeeze play. We'll watch to see what it does the rest of the day. Boeing, guys, this stuff is out there. I'm really going to encourage you guys to get to these events. We did this one this morning on Boeing. We did another one on these guys right here, and this was awesome as well. What did Netflix do this morning? Right? I mean, it gapped up and then it traded down. If you look at the candlesticks this morning, Netflix looked horrible. It gapped up a little bit, but then it filled the gap. A little bit of a bounce, falling 3 pattern. Oh, man, this sucks. This is awful, right? Right here, there it was. Okay? What happened on this candlestick right here that gave us our entry? Fred, I will draw it out for you. Okay? I will draw it out for you. What happened here that made us look at Netflix and say, yeah, this is one we should probably look at as well? Bounce off the 20 moving average. Okay? Intraday broke through both moving averages. Good. Bounce at the 20. Okay, why would this candlestick right here be a valid entry candlestick? Right where we were right here. Why was this one a valid entry candlestick? Here, let me help you out. Above yesterday's close, that'd be one reason. Closed above the last bearish candlestick, that'd be one reason. First 5-minute candlestick breakout. There you go. Those of you that follow Marquet, I'm one of them. That's exactly what that is. Okay, so there you go. Stock came back down, double bottomed, actually gave us an opportunity to add to our position here, and then you had this Bollinger Band breakout. We actually got in on this Bollinger Band breakout right here. I missed the original entry. had a double bottom, but there was a valid entry right here, guys, with a stop below the low of the day. So an entry here with a stop here did not ever stop you out and actually gave you another opportunity to buy more options for less money and add leverage to your position, and then the trade took off. And that was, if I'm not mistaken, guys remind me, because we did a bunch of trades this morning in the lab, but I believe that's exactly what we did on Netflix. We added to the position on the retracement. It might have been Facebook that we did that on. So got a nice trade out of it. Andrew, we do single session enrollments to the morning lab, so you can call our customer support and they'll get you taken care of there. Or you can come in and do a 1 month session if you don't want to subscribe to an entire quarter. You want to come and check it out, right, for a trial period. I mean, y'all let me know what you want to do and we'll take care of you. That Netflix position, guys, just so you can see it, we got in, we bought those options this morning at $1.85. They're trading at $3.05. We got a little bit to go before we hit our $3.85 target and take half the position off. So we're up $2,200 on that. Okay, so some kind of cool trades and setups that are showing up here, guys. We've got Apple, really tight Bollinger Band squeeze play. Amazon, really tight Bollinger Band squeeze play. Boeing going into a squeeze. Netflix walking the upper band. And Tesla walking the lower band. We had a really cool setup yesterday on Tesla. I don't know if you guys caught this or not. Those of you that are in live, you already know about it. We're still sitting right there on the 10 moving average. Yesterday morning, Tesla came down and did this right here, right at the 10 moving average. So the daily chart, that was yesterday. We were down here right on the 10 moving average. We got this candlestick. What, man, that candlestick right there, what is this pattern? What is this two candlestick pattern right here? That's bullish engulfing. Mike, how are you, sir? Good to see you in here. Bullish engulfing. Now, here's the deal. Stock has been down for 1, 2, and now it's all the way down at the 10 moving average, like 3 days down, and you get this bullish engulfing candlestick. How many of you would be excited and comfortable buying call options down there? Linda says I would. Okay. And I thought that some people might come in and say, yeah, I would be comfortable doing that. All right. Are you buying them now? Because you're in the same place. I'm not saying, I'm just saying. Okay. Sally says I'd be interested. Sally says not till it broke the 10 the intraday. Okay. I'm saying. Letitia says, I wouldn't, but I'd like to be. Here's what I'm going to tell you. You'll never get there, right? I literally yesterday in class made the following comment, Letitia. I said, man, this is ugly. You got a 3 black crows bearish pattern going on. We're all the way down here at the 10 moving average. The stock has been going down for 2 days. I am not comfortable, and that is exactly why I'm buying the calls here, guys. We bought call options on this candlestick right here, on this candlestick right there. We bought call options, and we had a stop below the low of the day. So literally very tight stop to where we entered. And this is how it went, okay? True story. And you can confirm it with the folks who are in here, who were in the lab. We got out right there. It doesn't happen very often, and I can't say it if it didn't happen. Right? I get in trouble for that. But, guys, we got out right here. All we missed out on was the top of that wick right there. We got out. Oh, yeah. It was, Ron, I will be in Chicago with Marquet in June for our Traders Intensive. Tom says, true story, I was there. Sally says, you did. Okay. I mean, guys, we got in here, we got out there, and we waited for a retracement, and then we rolled into a cheaper strike price. Okay, so we still have some bullish exposure to the stock. And it was a pretty good little play, right? And then this happened right here, and we said, let's play Marquet's fade into lunch. So we did a fade into lunch. We bought puts, which is what Marquet teaches in her DVDs. You all ought to get them. If you've got them, open them up. Okay, just like my fitness DVDs are not going to make me fit just sitting on my desk. Marquet's DVDs, my DVDs, are not going to make you a better trader sitting on your desk. The stock sold off from 258 down to 248. Took $8,200 of profit, I believe, on 10 contracts in our paper trading account off, and I took it off right here. What made me get out right there? Okay, Bruce says, I was there, but could you go through the rationale for getting out of the calls, Bruce? Okay, because most of you seem to be understanding what got me out of the puts. Most of you. Not all of you. Okay. Trish, very nice summary there. Trish says, you have a bullish engulfing pattern, failed to touch the lower Bollinger Band. Done. I'm out. Okay. Brenda says rising 3. We didn't have a rising 3 there. We did not have a rising 3 there. Let me go through that because I can't remember who it was. Somebody asked, what is a rising 3? What is a falling 3? Just in quick form here. Guys, this is stuff that we cover in great detail at every single live event that Marquet and I do. We got one coming up in Miami. You guys need to get there. Because this stuff is important. This stuff right here, the learning to read the charts, is what will make you a trader. Okay, you get a stock, it's going higher, it's got a bullish pattern to it. It is trending from the lower left-hand corner to the upper right-hand corner, and you get a large-bodied bullish candlestick followed the next day by a smaller-bodied bearish candlestick, and the day after that by a small-bodied bearish candlestick, and the day after that, perhaps a doji or a small-bodied bearish candlestick right here. This is a potential rising 3 pattern at this point. Now, here's why. Technically, it is a rising 3 pattern as long as all of the retracement candlesticks fit within the body of the previous bullish candlestick. If that's the case, you need to be watching this pattern. You need to be watching this chart. Because if this stock then begins to become bullish, and again, Marquet covers this in her DVDs, there are a number of different entry opportunities, 4 to be exact, with different risk management strategies to handle your risk in the trade should the trade be going against you. And so each one of these entry opportunities here on this is an opportunity based off of what is a rising 3 continuation pattern. This pattern is a continuation pattern. In other words, we're more likely than not to continue the bullish move that we saw in the trend. Okay, so that is a rising 3 method candlestick pattern. Likewise, we can have a bearish trend, right? So how do we know we've got a bearish trend? If it is moving from the upper left-hand corner towards the lower right-hand corner of the chart, that is a bearish trend. If we have a large-bodied bearish candlestick that is then followed up with several, it can be 1, it could be 2, it could be 3, it could be 19. I had a falling 3 pattern that had 19 candlesticks, and it did in fact become a falling 3 pattern, and the stock fell after that pattern resolved itself. Okay, so you'll notice that all of the smaller body retracement candlesticks fit within the body of the previous bearish candlestick, and we now have our 4 different entry points. Okay, so that is the difference between a falling 3 and a rising 3. What does it look like in the real world? Well, here's one right there. Bearish trend, large bodied bearish candlestick, 1, 2, 3 smaller bodied candlesticks, and then a continuation of the trend. Ta-da! There it is. That's what it looks like in the real world. Not quite as clean in the real world as it is in the awesome drawings that I'm doing, which are available for purchase at any time. All right, so this is what we've got here. Now, the reason that I got out, some of you guys have already explained it, a Bollinger Band bottoming pattern with an engulfing candlestick. We were out of our puts. Now, Bruce, did I get your, let's see, was it calls or puts? Calls. Okay, our logic for getting out of the call option, since this was going to be a swing trade and our stop was all the way down here, our reasoning for getting out of the calls, Bruce, was an aggressive roll. We were just going to roll to the cheaper strike price because we had so much profit in the trade. We had $14,800 of profit in the trade. We got out using the 1-minute exit, got out, took 7,000 of that, 6,000 of that, and rolled it into the same number, in this case of contracts. I believe that's right, the same number of contracts, and for less risk. Okay. Tesla's also near all-time highs. Is that a problem? Not as long as people keep buying the stock. Right? It's all about buyers and sellers. Philip says, finish what you're saying about comfort. You're saying that comfort will not come. Marquez says, I want you to be comfortable being uncomfortable. I think I know where she got that. Or maybe I got it from her. I can't remember which. Since she's not here, we're going to say she got it from me, Philip. Don't go tell her that. Yes, I want you to be comfortable being uncomfortable. If comfort comes, then it should scare you. If you're comfortable in a trade, you're in the wrong trade. You're buying at the top, right? If you're one of those people that needs confirmation all the time, right? So you're like, well, I'm not going to buy it there. That's just one candlestick. It's a bullish engulfing. Well, I'm not going to buy it there because it's just below the 10 moving average. Well, I'm not going to buy it here because it's gone too far. Well, now it's moving above the upper Bollinger Band. You can buy it here? Well, no, it's gone. I need a little more confirmation. Well, there's your confirmation. Well, yeah, but now it's gone too far, so let's see if I get a retrace. You know what? I'm going to wait for a little bit. Well, maybe a little bit more confirmation. Man, I am missing out on the whole move here. This is freaking sucks. I hate this. At least the stock's going higher. You know what? I'm thinking if it goes up one more, I'm going to buy it. Yeah, maybe just one more. You know what? Yeah, I'm going to go ahead and buy in now. I'm comfortable buying in. See, I was right. I was right. No, you should not be comfortable. Don't be comfortable. Guys, this is not normal. Trading is not normal behavior. If you're looking to be comfortable, get a job. Right? I mean, and even there, I will tell you it is a false sense of security and comfort. If you want to be a trader, right? Don't be comfortable. So yeah, Philip, you are correct. Comfort will not come. Do not expect it. Do not wait on it. Get comfortable being uncomfortable. Bruce says, so the call exit rationale was to roll out, not switching to a day trade from a swing. Exactly, Bruce. In fact, we still hold, let me show you. We still hold the position. I'm still in it. Right there, look at that. Check that out. I'm getting killed on that. $9,800 I'm down on that position. Oh, man, what are you thinking? That I made $23,000. That's what I'm thinking, okay? The entry on which stock when it bottomed and reversed? On Tesla? Right here. Okay. Stock, no, that was today. So let me take you back to yesterday. Right here. Okay. There it was. And if you look, what was the price that happened at? All right? Got down to 245.23, and let's come over here to the daily chart. 245.23 is right there at the 10 moving average. Put position was a day trade, Bruce. That is correct, because it was a fade into lunch. Guys, how much were the options? $5.50, right? I think is what we paid for them. They were not terribly expensive. You can learn to do this too, but you got to learn, right? You got to learn to do this. There's a lot to it, guys, and you know, the sad thing is, I've been kind of spoiled here the last couple of weeks. You guys haven't, but because you've had to put up with me. But I've been kind of spoiled because I get to talk to you guys for an entire hour. And obviously, love to have Marquette in the room, and love to have her speaking to you guys, and love to see you guys learning from her. And I learn from her every single time she speaks as well. The last couple of weeks, because she's been on vacation, I've had the opportunity to spend the entire hour talking to you guys. And I'll tell you, for both of us, it is frustrating to only have a few minutes to talk to you guys, and that's literally what we do. We literally talk to you guys for 30 minutes, right? Sometimes she talks for 45, but we'll just keep that between us. And so our frustration is, how do we get the message across? How do we teach you guys in 30 minutes or an hour? And we have to keep reminding each other that this is a promotional event. Guys, I'm going to let you in on a little secret. The only reason we do this class, the only reason that we do this free class is because we hope that in some way it will motivate and inspire you to come to the live ones in person when we've got 2 full days with you, or to get motivated and get serious special training and get enrolled for the 5-day Traders Intensive where we got 5 days to spend with you. We share a little bit of information here with you guys, and you guys come back here week after week and you see it, and you see it over and over, and that's great. But you're still going to struggle as traders because you don't have time in an hour session with 2 instructors to go over mindset, to go over stops, to go over advanced technical analysis, to go through hedging, to go through, and if we do go through one of those things, we don't touch on it again for a month. Get to the live events. Y'all, we do live events for a reason. Y'all ought to go to them. There's one coming up. What more do I need to say? Every single person in here is within flying distance of Miami, and they have an international airport. I checked. You're not going to learn this in a free class for 30 minutes or an hour once a week. You're not going to learn all of it. You'll learn some of it. And it's my hope that you'll be motivated enough by what you learn to say, hey, I need to learn some more. Let me get to these classes, get the DVDs, learn more of the information, because this is powerful stuff. Y'all, we did it yesterday. $14,800 on the way up, $8,400 back on the way down, and we still own call options if this thing takes off and goes higher. Darla says, fly into Fort Lauderdale, it's cheaper. Nice. We do, don't we, Judith? In addition to the 5-day. Yes, we are doing the next step. I don't know if Marquette and I are doing it. We'll see. Andrea says, did you say Marquette and you and Marquette are doing the next step in Philly? I said that if you guys would like me to, I'll ask her. I would love to do a next step in Philly there. Marquette and I did one a couple of years ago. We had a great time. It was a great time, great city. All right. I will. Y'all got to go. All right. If I convince Marquette to do an event in Philly, y'all got to go. I convinced her to do one in Miami, and I'm looking at the enrollments, and I'm like, we might just cancel the class, and we'll go hang out on the beach at South Beach. Those of you guys who are like, do one near me. Yo, travel. We do. And better weather in June than it is in January. Yes, Judith, you are correct. All right, guys, that's what I got for you. I do seriously have stuff I've needed to get to and get taken care of. Appreciate the opportunity to hang out with you guys. Looking forward to doing it again in the very near future. Until then, I wish you guys all the success in the world. Godspeed, God bless, and we'll talk to you guys at the next live event.